Ladies and gentlemen, good morning and welcome to the GITEX FinTech Surge event. My name is Alexandra Topalian and I'm going to be your MC for the next few days. Welcome to everyone who has traveled from abroad and to our local delegates as well. This FinTech festival does bring people from all across the globe, and with this influx of people comes an influx of forward-thinking ideas and discussions, as well as non-stop networking. So we are going to have an incredible week, ladies and gentlemen. All right, so to begin, let us call upon our first panel discussion for 2022, the KARM Legal Panel. And this panel will discuss emerging trends in retail lending, as well as various trends such as BNPL, crypto lending, and DeFi lending solutions that are available for retail consumers, as well as the regulatory aspects surrounding these concepts. And now, ladies and gentlemen, without further ado, I would like to call upon our moderator for this discussion, Ms. Akshata Namjoshi, Associate Partner at KARM Legal Consultants. Let's give her a warm hand. Hello. Next, we have Mr. Zuhursho Rahmatulloev, co-founder of Alif Bank. Hello, welcome. Mr. Alper Celen, founder of Enhance Ventures. Welcome, Mr. Celen. Woo! Mr. Ratul Roshan, Senior Associate of KARM Legal Consultants. Welcome, Mr. Roshan. And last but not least, Shantnoo Saxsena, CEO of Encryptus. All right. You all have your microphones. Perfect. Miss Moderator, the floor is yours.
All right, I'm just going to give this a shot. Everyone can hear me? Perfect. Good morning, everyone. Thank you all for joining our panel today. And congratulations to all of us for making it here finally with all the traffic. So wonderful. Brilliant. So I'm very excited to moderate this panel today, especially given that our topic is on emerging trends in retail lending. And I'm actually very, very happy to have an illustrious panel here. I have a bank, I have somebody from venture capital, I have somebody from the crypto world, and I have a lawyer who's advised them all. So very quickly, Zuhursho, can we start with you? Could you please introduce yourself, your background, what have you been doing?
Good morning. Thank you for making to the hall. It's been hectic, I know. It's had to walk quite a distance to get here. So we can see that we have a dedicated crowd. Thanks a lot. My name is Zuhursho. I'm a co-founder of Alif Bank. We founded our bank in Tajikistan, Dushanbe. But we started as a microcredit organization in 2014. So since then, we grew into a bank. So we were able to graduate from a microcredit organization into a full-fledged bank. So when we started, we wanted to do a Sharia-compliant financing for Tajikistan and for the region at the time. So, and since then, of course, we expanded into Uzbekistan, going, inshallah, to Pakistan and the Gulf region as well. So pleasure to be here. Thank you.
Thank you, Zuhursho. Alper?
I'm Alper Celen. I'm founder of Enhance Ventures. I guess we're the original venture studio in the region, and we build ventures from scratch for future of finance and commerce. Some of our ventures, if you're living in Dubai or in the region, you may know them, like Joy Gifts. It's a big marketplace for gifting. We have Clever, which is a cashback app, digitalizing SMEs in Saudi and UAE. We have Moderator, which is an organic mart. That's a subscription model. We just launched a crypto exchange in Turkey, and we'll soon be launching it here. It's called BNS, and a few other ventures like that. And we're involved with future of finance, and we're looking at models where we can emulate banks in different ways without needing that banking license. And that's the disruption that we're trying to achieve with the things that we build.
Wonderful. Thank you, Alper. Ratul, can we hear from you?
Yeah, thank you so much. I'm a senior associate at KARM, and I work closely with our clients in the fintech or fintech plus crypto space. I've had the privilege of working with all of our panelists here today, and definitely it's been a good learning experience. But yeah, let's see how I can add value to this panel. Yeah.
Lovely. Thank you, Ratul. And Shantnoo.
Hi, good morning, everybody. Finally, as Akshata said, we all made it. Thank you very much for joining. My background is payments and cryptos. I did payments for about 8 years back in the UK with instant money, which effectively today is called as Bitcoin, movement of value from one peer to another peer, and that's what instant money transfer companies are. That gave me an in-depth learning about how money moves in a regulated environment. But I came to Dubai 4 years ago to start operations for one of the top 3 crypto exchanges in the world. And since then, Dubai has been home. So I advise various other crypto companies, but we run Encryptus. Encryptus is fully licensed and regulated in several jurisdictions because we believe cryptos can only get to mainstream if they are regulated and licensed. And that's the transparency we are bringing into the ecosystem, and glad to be a part of this panel with fellow panelists. Thank you.
Lovely, lovely. Thank you so much, everyone. I'm quite excited, definitely, to hear from all of you. Let me quickly start with you, Zuhursho. You've had a beautiful journey with a banking license in Central Asia. You've also ventured into digital banking, but also at the same time, in addition to, let's say, the traditional models, you've tried your hand at BNPL, SNPL, deferred payments. Tell us something about what the journey has been like, and definitely how the traditional banking and finance system has, differed from the new trends of BNPL and SNPL that you're trying to bring forth. Tell us, how has that experience been?
Thank you very much, Akshata, for the question. It's very general. I'll try to give a very concise answer about the journey, because the journey is important to understand the journey, because this is how you evolve as an organization, as a company. And at Alif, because we started from an economy which is relatively developing, it's not a developed industrial estate, so we had in mind a Sharia compliance in mind, so we had to come up with products that are not interest-based. So whatever we've been trying to do has to be a transaction-based or asset-based transaction. So therefore, we came up at the time, 2014, with a product that we now call BNPL. All right? So this allowed us to bring merchants into our network and boost their sales, basically. Okay, whatever they would sell. And today, since then, of course, we've been able to create an ecosystem where you would allow a merchant to sell almost anything on deferred payment basis, starting from petrol. You can pay your bill at a restaurant and beyond. So this journey has been very educational, and at the same time, it kind of pushed the limits to think more than just a simple bank, which is heavily regulated, and therefore we ventured outside of the country as well. So we had to go to places or neighboring countries like Uzbekistan and establish entity there, and it allowed us to broaden our horizons. Once you get out of your comfort zone or push your limits, it allows you to think differently, because different regulation has different approaches to things. There are certain nuances. You have regulators have certain mentalities. Of course, certain things are universal across the board. Regulators want a stable system, and you have to create that comfort for your regulator as well. So it's been one of the characteristics of our journey has been the fact that we would start small in any jurisdiction. We would start very small and basically prove whatever we're trying to build, so a regulator would be comfortable with whatever product that is. And it's usually a credit product or alternative to a credit product. For example, I'll give you an example for the Gulf region. Coming with a banking background, coming from a country which is different, or the region which is different from this region, we after thinking, of course, KARM team has helped tremendously. After thinking for quite some time, we realized that we would like to serve 2 million plus underbanked in this country and similar segments in the Gulf region. So how we would do that? So BNPL did not appeal to us because we didn't feel that we are going to compete in a, almost, but it's getting more or less saturated in this part of the world. So we thought that why don't we merge remittances and credits by giving the underbanked a way or enable them to send money right now and then settle later. And that's why we call it SNPL. All right? And thankfully, we're working on this product and thinking with KARM team, and hopefully we will be able to launch it soon and see how it goes. Thank you.
Perfect, thank you. I just have a very quick follow-up question on that, Zuhursho. You did mention that most of such models of deferred payments have been interest-free. I just want to hear the story on scaling up. As a startup where all the traditional credit models have been predominantly based on interest rates, and how repayments are made, how does a model which has very limited or no interest rates would scale up?
In terms of funding, the funding, yes. It's a very good question. You cornered me, Akshata. You shouldn't have asked this. But anyways, when you start any entity, any business, a startup, you would start with your friends and family, right? You would have a seed investment. You would have a different stages. And of course, we had to come up with a revenue sharing model with our investors where we would say that, you know what, we cannot pay interest on your deposit. So let's come up with an arrangement where both parties would be comfortable. So we came up with a contract, let's say, more or less deposit, a hybrid product where the income rate would be floating rather than fixed. So this allowed us, once you convince first 10 investors, then 20, 30, then you have a snowball effect. And by then, you have larger, let's say, operations, and you can prove the concept and say this is how much this portfolio has been generating for you, even more than any conventional counterpart. This creates even more buzz and interest. Just give you a last year, 2021, in July, we closed let's say, Series A fundraising round, where we were valued at around 100 million plus USD, 104 to be precise. And since then, we've been growing, and the run rate revenue is much higher. It's like 3 times higher than it was at the time. So just an example.
Perfect. Thank you so much for the insights into that. Shantnoo, now quickly to you. You have a beautiful history of working with different exchanges, OTC desks, and now you also tried hands at DeFi models. Tell us how the crypto DeFi lending space is working. What are the new models? What is it in for our audience?
Well, honestly, it's in a mess right now. That's a reality. You know, the reason for this mess, I will start with the negative answer first, is purely because the tech and entrepreneurs, they go ahead and they just implement a model without thinking about the economic consequences and social consequences. I mean, we saw the fail of Celsius Network. I mean, frankly, I was very surprised when I saw the downfall of a company like Celsius, which was so regulated and looking at international markets in a very regulated manner. This makes me think it's probably the greed as well. The greed of investors, the greed of the entrepreneurs to have a model and give crazy returns to bring users. I mean, everybody knows the rise and fall of Terra Luna. Millions of people lost billions of dollars overnight. So such models are giving probably, unfortunately, a bad name to DeFi as an industry. But if you look at the concept and implementation, it's amazing because a user can get a loan based on a collateral what they have deposited. I mean, think about it. Just a personal example. When I was going for higher studies, I wanted to borrow, I don't know how much is that in dollars, but I wanted to borrow X amount. But the property documents that we gave to the bank was X plus 200, 300%. Now, how is that a good model? Imagine if I decide not to pay, my parents lose their property, isn't it? However, in DeFi as an ecosystem, it brings transparency to the whole ecosystem. It also brings, and that's why probably we know the real numbers by which the companies have defaulted. We saw the total value logged in the DeFi ecosystem at its peak of around $80 billion, which is currently at around $19 billion TVL. And majority of the volume is actually still blocked in lending and borrowing. That is the currently that's what is happening. However, regulations again are playing a very, very important role, because if you have got products which are regulated and licensed, which also means, I was thinking about it while coming here about this as a model. Every 20 years, every 2 or 3 decades, there is a new concept or a new model that comes in. A lot of people lose a lot of money, and then the regulators wake up and they say, we are coming up with new laws and regulations. And probably, I'm not saying the regulators are sleeping, the regulators are working very hard, but this industry is going at such a fast pace that it's even difficult for me to being in this industry or being in 7 years in this industry, but I find it hard at times to keep a track of what's happening, what's new, what's the new scam, what's the new business where people have lost money. So I think over a period of time, we will see transparency. Regulations, of course, are coming in. And probably a good way would be integration with the traditional world of finance. I'm not of that philosophy that says the world is only for cryptocurrencies. That's not the case. The world is for everybody, and cryptos is for everyone. So we need to learn a lot from the traditional finance. We need to learn a lot from the banks, and of course bring technology and call those model as it's called a CFI, but I called it CDFI. It's centralized, decentralized finance combined together. The power is endless because users can borrow money instantly. Plus, it has use cases not just in lending and borrowing, but multiple other segments as well. For example, investments. So I think we have to become more cautious and more honest in terms of returns. So BNPL seems to be a great model. I think the global worth is around $132 billion right now for BNPL in the traditional space. In the new space, probably we'll have more credit products on the crypto front, and that should probably change the outlook. I don't know if I've answered your question.
Definitely. Thank you so much for that, Shantnoo. And thank you for bringing up how regulations and regulators are responding to this. That brings me to our next panelist, Ratul. You've worked with the central banks in the region. You've worked with the securities regulator. How has the response been? What is it that the regulators are really trying to regulate? What are they looking for? Any thoughts around BNPL, DeFi? What has their response been?
Sure. Thank you so much for that. So I completely agree with what Zuhursho and Shantnoo have said, right? The regulatory game is more often than not a catch-up game. That's just the nature of the game we're playing, right? However, what is so revolutionary, I believe, about decentralized finance and the way it will be regulated is that there are multiple models of regulation, right? You have hard touch regulation, soft touch regulation, you have self-regulation. Now, DeFi is one such tool that we can use to enhance self-regulation by making disclosures more prominent, by being more transparent, by disclosing information more openly to the public. Now, this will solve for the problem of regulators having to play catch up, right? Because ultimately you are trying to hold yourself up to higher standards. And we've seen very successful models of self-regulation in traditional finance as well, across the Middle East and across, not the Middle East, but Southeast Asia. I think that's where we will go eventually. But where we stand right now, unfortunately, is that regulators are still trying to understand or look at decentralized products from the lens of centralized finance or traditional finance. And they're not to blame. They have to do a good job given the kind of, I wouldn't go so far as to say scams, but that is the only word that comes to mind. There are a few slip-ups that have happened, and of course regulators have to be on guard. They are doing their best. We are part of that process as KARM on multiple. We've been on those panels on multiple occasions. It's going to be a slow process, but I think the first step is going to be for regulators themselves to figure out who is the central point of contact, who is the regulator, who owns this stuff, and from there this conversation is going to start.
Perfect. Thank you so much. Great. So Alper, now we've heard from Zuhursho, we have heard from Shantnoo, and we have heard from Ratul, who's a lawyer. with the regulatory uncertainty, with so many new models which are coming into the market, how has the venture capital space reacted to it, right? Because on one side, you also have, let's say, a bit of confusion in terms of regulations and how it's going to be looked at. But at the same time, you also want to invest in the new products purely for the reasons of scalability. Tell us about how has your firm, yourselves, how have you sort of managed this? What are the typical thoughts on exit rights, valuation, any insight that you can give us?
So how we work is quite unique. We're not a typical venture capital fund. There's some venture capitalists among us, but we do wear that hat as an investor, but we also are co-founders to the ventures that we build. But that gives us this flexibility in that we start from the idea. And so it starts from the demand, right? And people are just bored of the same old, payment methods. Right? If you're going to pay with cash or you're going to pay with your regular debit or credit card, that gets the job done, and that's how this $100 trillion global economy runs today. But people are open for change, right? And when we look at ideating on the future of finance, one of the main themes that we're looking at is asynchronous payment. It's not BNPL only, right? We have a venture that does buy now, pay now, buy later, right? You can reverse it as well. People are interested in that if you're willing to give something, right? Clever is exactly that. You top up, you pay to a walled wallet for SME retailer, and because you top up and you promise that you're going to spend so much, you end up getting cash back, right? That's pay now, buy later, and there's a lot of demand in that. Buy now, pay later is also great. We use it in one of our bigger ventures, Joy Gifts, has quite a bit of adoption. You would think, when we first started, we were one of the first users of BNPL with a company that starts with T as our server and service provider. And when it first came, I said, who would buy flowers? Joy sells flowers, chocolates, and cakes, joygifts.com. Go buy more gifts for your loved ones. But I said, typical basket size about $100. Who's going to buy now, pay later for $100 for flowers? Actually, quite a few people do. And it's interesting because we also did a lot of A/B testing. You offer it, people use it. You don't offer it, it doesn't really hurt your conversion that much. People are still willing to pay. They have $100, most of our customers. But it does increase customer satisfaction. So to us, the big question is, always when we're innovating, because that's what we're in the business of, how do you go find disruptive ways of paying things? It's not only BNPL, it's also pay now, buy later. It's also enabling technologies. We're not necessarily looking at DeFi or blockchain technologies. We think they're enablers, but it all starts from if the customer, be it the retail customer or SMEs that are interested.
Wonderful, wonderful. Thank you so much for that, Alper. Coming back to you, Zuhursho, what do you think will the crypto and banking ecosystem look like? They've always had a love-hate relationship. Banks kind of have their concerns when it comes to the crypto businesses, and crypto wants to sort of outdo and undo a lot of things that traditional banking stands for. Blend this with deferred payments, and we have all sorts of different models all together. So what are your thoughts on how you think it's going to pan out?
I'm not sure if I agree on the statement, a love-hate relationship. Why? Because banks, when it comes to crypto, they serve as enablers, and they are benefiting from transactional side of things. Let's say on-ramping, off-ramping, using the cards, debit cards, credit cards, etc. Banks wouldn't care as much, but there is a question of how a regulator would actually see the trends and whether any regulator is comfortable and happy what's happening in the market. We've already heard that crypto let some people down big time already. Quite a few people have lost money. So when it comes to regulation, because this is a very important element to note, then when a regulator commits itself to regulating crypto, it becomes automatically, in the minds of everyone else, becomes a guarantor that you will be safe. You will be fine. No worries. We got your back. And this actually slows down the, let's say, the learning curve and the option for on the side of the regulator. But the regulator has to learn how to regulate this space, because it's, by definition, it wants to be, it tries to be decentralized, by running away from regulation. It's the space where we would like to get away from central banks. And when we say that, let's bring them together, it means that for the time being, a regulator is not yet ready to commit to this relationship, but we are, let's say, a blockchain enthusiasts are more or less comfortable coming, going, and trying to help our regulator to have better disclosure, transparency, traceability, and all of these things. For example, I'm coming from a background, from a country where, let's say, Alif Bank. For example, we don't have a corresponding relationships with American banks. They just don't want to cover us. Those tiny, small stand countries. And I'm being ironic here because maybe it's pain that you can feel now. But in between, in order to make an international transfer, you have at least 5 intermediaries in between. In countries like Tajikistan, we are on the receiving end of, let's say, remittances, right? So just imagine how it hurts our consumers when they're trying to get remittances from another country, and it goes through 5 different intermediaries and banks, where every single bank would have its own policies, procedures, compliance, etc., and it ends up to be very expensive for a recipient or the sender. All right? So let's say, according to the World Bank report, recent one, for the time being, remittance, a commission to transfer around $200 would end up to be 6%. Just imagine, 6% for $200. And the $200 is a lifeline for those people in those countries. Tajikistan, Kyrgyz Republic, Uzbekistan, we have countries, Bangladesh, Pakistan, which are connected to these economies. All right? So, of course, blockchain today promises to fix that problem. According to one report by Data Block or something, I'm not sure about the date, the guys, they're claiming that crypto can help to make transfers faster by 370 plus times and cheaper by 127 times. But for the timing, it's a promise. So we yet to see the development in this field. And for example, in our case, in the case of our team, we're very careful. We're not going out there promoting this, but we carefully and spending quite a bit of effort for the past 1 to 2 years to understand the technology that potentially can enable us to serve more people around the world and having a very nice, comfortable relationship with regulators internationally. Yeah?
Lovely, lovely. Thank you so much for that, Zuhursho. Shantnoo, just piggybacking on Zuhursho's point on intermediaries, right? On one side, we've had traditional intermediaries in banking system for all these years, but the role of liquidity providers and OTCs has been tremendous in sort of supporting the crypto ecosystem as a whole. What are your thoughts on how have they sort of innovated? How has, let's say, even the liquidity provision landscape changed over the years in the crypto history?
Right. It's a very good question, but before that, I'll just try to answer a point that Mrs. Zuhursho was making. 5 different conversions, actually it's insane, and I can't believe that the user actually has to go through 5 different conversions when we live in the world wherein everybody literally is doing everything. And by the way, I'm not a supporter of one company to do everything in the world. We need people because of expertise. We need different companies because of expertise. What you are probably great at, I'm not probably great at that, but I'm probably good at something else. So it's about joining the dots and making a square, which is very important. We built one of the first regulated models between Bitcoin and money transfer in 2016. And I remember coming to Dubai in 2017. That time there was no USDT as such with market cap. It mainly used to be Bitcoin. And I went to all the major exchange houses and we showed them like how Bitcoin actually helps them in liquidity, how Bitcoin can solve, because I worked in the remittance space as well, I understand, say for example, if the transactions have to be paid out on Monday, on Friday, the remittance companies have to pre-fund the banks. You are aware about that, right? So it means 3 days of block liquidity plus uncertainty. And what happens if it's a public holiday? Then, the amount of cash you're leaving with a third party. And the reason I say everybody a third party is we saw the rise and fall of Lehman Brothers in 2009, right? Which makes me fear that nobody is safe. Whether it's cryptos or banks, really it's the user who has to take control of their assets, of their money. However, so there are options available by which you can reduce the timelines and reduce the cost as well. Like from 5, 6, 7% is insane. We work with in the African continent at 1.5%. Kenyan shilling to crypto liquidity to Kenyan shilling. For 1.5, 2%, we can execute the orders. I'm not trying to boast what we say, what we are doing, but we understand the pain of the user. And until the companies really understand what the user is going through, they will never build a model. They will only build models to benefit their ecosystems. Akshata, sorry, coming back to now what you really were saying. So I think in the crypto space, OTC desks are playing a very important role because they are managing both the fiat liquidity and the crypto liquidity. And this is actually what you need. As I was mentioning earlier, I'm not of that school that says only fiat will say or only cryptos will say. Both have to coexist in an environment which is regulated, which is compliant, which is monitored and licensed. Now, whoever solves this problem first will probably, in my opinion, will have the last laugh or the final laugh, because they will bring not just the ecosystem together, but transparency, which is the key aspect of crypto as a function. So I think crypto exchanges, more than exchanges, I think it's the OTC desk, which will add a lot of value. It is comparatively easy to regulate. A good desk generally will not sell more than 5 or 6 tokens, whereas a crypto exchange actually complicates the whole scenario because they have 400, 500, 800 pairs. How is it possible to keep a tab on this? Like, think about the manpower. You cannot automate everything. If you have got 70 million users, without naming anybody, those 70 million users are doing billions of dollars, 20, 30 billion dollars a day. Think about the data that you're collecting and think about the transactions which will undergo heavy monitoring. You still need people to say yes or no, right? Even if a transaction is flagged for unknown reason, you still have to go back to the backend system and authorize. So who will do the job? So OTC, I think less number of tokens, bringing more crypto and fiat liquidity will probably the most interesting aspect within the crypto space on the OTC. On the DeFi side, I think crypto credit cards will probably play a very important role. Like I was trying to, so just recently I got a crypto debit card and I was so impressed with the whole service. Like I could just deposit cryptos to my wallet and I could use it anywhere in the world, just like a normal debit card. But a crypto credit card, the interest rate is anywhere in between 20 to 30%. So it's laughable because of the risk. But look at the risk that other traditional companies are taking. But OTC as a function and with stable coins in place, the cost can be reduced further. And of course, with good KYC and monitoring tools, the transactions actually can be verified end to end.
Absolutely. Thank you for that, Shantnoo. I really like how Shantnoo said that the fiat and crypto world needs to coexist because that's the only way out. On that note, Alper, we all know that crypto funds, fundraising through crypto models, tokenization models has been, I mean, it's been there for more than a decade now. How has venture capital been impacted by this? On one side, we have, let's say, more traditional, more established models of fundraising, but more and more companies are going for, let's say, riskier models with cryptos, or crypto funds are becoming a huge trend right now. Any thoughts around that?
I think if we had this panel 6 months ago, the answer would be probably a bit different. And I think they will both exist in the long run. I think this winter will pass, and crypto is here to stay. There are countless use cases that are just in demand, and the investors that are in that crypto world will have to find ways of investing that match the underlying, decentralized or blockchain-driven investment methodologies. So they will both exist. I think it's different kind of people. I have friends. I have a lot of VC friends that are more traditional VCs, and I have some friends now that we're launching a crypto exchange and dwelling more in the crypto world. I have some friends that are investing only in crypto, and very different characters. I think over time, some of us more traditional investors are going to get better versed and will be able to better assess through the noise what is real value, but that'll take a few years. On the flip side, will we see some of the crypto investors coming and investing in traditional equity-based startups? Maybe. Some of them have reached out to us and start discussing, can we do a DeFi or Web3 studio together, right? So I think maybe the studio world is going to be somewhere in between that traditional VC world and this Web3 crypto world, where the investors can meet and start building stuff from scratch. One comment about regulatory, since we have lawyers in the panel and we've been discussing about regulation. I used to hate regulation. It's just, I'm a founder, I'm an investor, we're startup people. Anything that slows us down is bad, right? Until I came to two realizations. One is that regulation is just another technology. When you change your mindset and say regulation is just technology, and you start behaving like it's technology, and you start product managing it like you would your digital product, and you would have experts work on it like you would with a senior backend or front-end developer, it's a complete mindset shift for your whole organization. That's one thing that I think has helped us tremendously over especially this last year, where we're dealing more with regulation in the financial regulation. Second thing is, a regulator is not your friend. It's not their job to be your friend. A regulator makes laws and enforces them. They're not a service organization. They don't have like an open door policy. You can't just go in and they'll be nice to you and answer all your questions. I didn't know that, right? I just came to that realization in this last year. When you suddenly realize that as well, okay, you say, how do I get to people that know? Because this regulator, as nice as people they are in real life, they don't have time for this, right? They don't, if you go to DIFC, the 500 fintechs over there, if DFSA answered all of their questions, how could they come up with new regulation, right? So that really changed our way of thinking and way of working.
Lovely. Thank you so much, Alper. Then on to Ratul. So, okay, just sort of borrowing from what everyone has said, what has your experience specifically been with the central bank? And there's a reason why I bring central bank into conversation, because we are discussing retail lending, and whenever, of course, there's a conversation on credit, central bank is the appropriate regulator to go to. However, when it comes to crypto, the discussion has been largely around whether it's a securities regulator or a banking regulator, which should essentially regulate. What has your experience been with different sorts of regulators in UAE, Bahrain, Saudi?
So multiple aspects to the answer there, right? I'll just build on what Alper was saying about the regulator not being your friend. And that's true. I mean, a regulator is committed to safeguarding the interests of the users. As long as the user is comfortable, they bring the company more business. So it's a good cycle, right? One helps the other, and the second helps the third. That said, when we talk about the CBOE particularly, on your question on whose turf is it, of course, that's going to be an open question. I think for now, the CBOE has done a great job by being very clear where they stand. They have said that we regulate certain kinds of tokens. Beyond this, it is not our mandate. And that clarity in itself is something that you will not see across the world, where multiple regulators will come up and say, no, this is my turf, no, this is my turf. Here, the CBOE has taken a good stand. What they've done is they've limited their jurisdiction very clearly. This gives us regulatory clarity. Clarity drives innovation. Clarity drives adoption. For regulators, that's how it works, right? Now, if you were to talk about the CBOE as a regulator compared to other regulators in the region, the MENA region, they're definitely one of the fastest. They are prompt, and they want to help you. So just a slight deviation from the general yardstick that the regulator is not your friend. I have not felt that way, especially dealing with the CBOE. They will go out of their way and answer your questions. They will come to you and ask questions. They're very open to taking inputs from not only policy folks, but also entrepreneurs, right? They're happy to sit across the table and say, this is something where we think you have expertise. Could you please tell us what you feel? And that's great. That's commendable. Like we've worked in Oman, Bahrain, Egypt, Republic of South Africa, everywhere, right? But the kind of promptitude that we've seen, the kind of clarity that we have seen with the CBUE is definitely commendable. So hopefully, yeah, that kind of clarity inspires other regulators to also come up to the front and say, this is what I own, this is what I don't own, and now let's let the games begin.
Lovely, lovely. Thank you so much for that. So I'm told by the organizers that we are, of course, running out of time. But if I have 2 minutes, I just want each of them to,
2 minutes.
Each of them to say just one sentence. First thought that comes to your mind. That's something that should change in retail lending. Stay put. Any quick thought. Any quick thought. Something out of your experience. Just one sentence.
Say it again, please, Akshata.
Okay. All right. Just one sentence. What should change or remain the same in retail lending, and especially for your sector, banking, digital banking? Just one thought, if you were to convey.
The easy one, to me, is a very easy one. I think the mindset of bankers has to change big time. Simple as that. They shouldn't consider fintechs and others as enemies. I mean, if they find a way to coexist and work and collaborate, I think we have a great future ahead. But otherwise, we're going to fail miserably. Thank you.
I think payments are going to be increasingly asynchronous. It's increasingly going to be decentralized and peer-to-peer.
Lovely. Thank you. Ratul? Shantnoo?
I think I'll keep it very precise. This is only just a suggestion to crypto companies. Get rid of greed. The day we get rid of greed, that day we'll see real ecosystems coming up.
Perfect. Thank you, Shantnoo.
Take more risks, but talk to the regulator.
Wonderful. Wonderful. Thank you so much for that, everyone. I had a great time this morning. Thank you, FinTech Search, for letting us have this panel, and I hope everyone had a great time too.
Thank you very much, panel. That was fantastic. Thank you for your knowledge. All right. If we could please move out the chairs. Thank you. All right, everyone. How is everyone doing? Yes? Who has traveled from abroad? Uh-huh. From where, sir? Canada? Montreal. Yeah. Fantastic. All right. Thank you very much, panel number 1, for opening the FinTech Surge event for us today on the FinTech stage. Okay, and now, if I can please, okay, so we are moving out the chairs for our next speaker. Fantastic. I will begin by, are you alone doing this? Fantastic. Thank you. Okay, next we have a speaker from Investera, who will talk to us about how disruptive technology is reshaping the way we invest. Ladies and gentlemen, please welcome Ms. Roa Shamluli, FinTech Solution Advisor at Investera. Come on down, Roa. Where are you? Oh, there you are.
Test.
All right, Roa, we're just removing the last table.
Take your time.
Perfect. All yours.
Thank you, Alexandra. Thank you, everyone, for joining GITEX today. I promise you this is going to be an insightful session. Today, we're going to talk about an interesting subject, which is how disruptive technology changing the way we invest. Oops, it's not working. One second, guys. Technical problems. It's not working. The next one.
Okay, we have a clicker issue, Roa.
That happens.
Technology.
All right. Is it working now?
Yay, thank you.
All right, so today we're going to talk about how the disruptive technology is changing the way we invest. And when I say we, by that means the investors. And the investors that we're talking about are family offices, investment banks, or PE, private equity. So what is the family offices? The family offices are a private wealth management firm that helps the high net worth individuals with their investments. The private equity firms. The private equity firms are investment management companies that technically provide the financial backing and makes investments for the venture capitalists, startups, private companies. Now, through the time, investors have been going through some drawbacks, and these drawbacks or struggles, let's say, are facing them and affecting the way they invest. Some of the major drawbacks that any investor, or let's say since we're talking about family offices, some of these drawbacks are the due diligence, the risk management, the process management, and the liquidation, of course. Now we're going to talk a little bit in detail about every drawback that the investor, whether it's a family office or a private equity, are facing. So now, talking about the drawbacks of the due diligence, there's the limited market data access. I mean, even though we're in 2022 and we have the Google or whatever, but there's a limitation to get to the information, whether it's data from the market, prices, whatever. And that's why we use some of the data providers, big names such as, let's say, Bloomberg or Thomson Reuters or any more. And, go back. And the data inconsistency, the increased cost and the commitment, and that's what affecting the due diligence whenever we are, any investment in the world, even if you want to invest in your own shoe, you need to, this is an investment, you need to study and look for what are the reasons that are making me choosing this specific investment. So the due diligence is your research, whatever you are doing. And these are some of the drawbacks that we're facing with the due diligence. Now with the risk management as well, some of the drawbacks are the cyber breaches, the cash flow visibility, the limited data security. Another drawbacks from the process management is the change of KPIs. Now any investor or a COO or any group director, let's say, who's managing these investors, he needs at the end of the day to just check the KPIs to look how is their investments are going, how they're working. So the changes in the KPI, this is one of the problems that we are facing in the investment. So we need a technology, we need something to solve that. We need something to keep us updated with our KPIs as our investors. And also the documents as well, the QIC documents or any other documents if it's not updated. Also the unclear task and workflow management. So imagine if you have a technology where it helps you with, there's a workflow attached to that, then that will be easier for you to keep on track of your investment, keep on track of your documents, keep on track of your KPIs and many more. Also the increased accounting and report complexity. Now another drawback that the investor is facing, which is the high cost of liquidation. I'm sure if anyone from a PE or any investment company would agree on that. The high risk of business stake sale and the value of ineligible assets. So the question is here, why do we shift? Why do we need to shift to technology? What is in this technology that's going to help us as an investor to not face these drawbacks anymore? So here are some of the key digital technologies that fintech plan to invest or help you as an investor, which is helping you reducing the risk and managing the security identity, which we all know how important is security and the data security. Creating the digital capability and enhancing the decision making along with the transparency as well. And the increasing the sustainability. Now here on the screen, if you can see with me, here are the fintech merging markets. And as you can see here, the fintech adoption rates across the 20 markets, starting from Luxembourg to China. And the average adoption is 33% of the technology, the fintech adoption. And that's raised a question in everyone's head. Why this adoption? How it's solving our problems as investors or as startup companies or anyone who is investing as a family office or an investment bank. Obviously, there's some solutions that in that fintech technology that are helping us to invest in a better way. And these are some of the solutions of the drawbacks that we've been facing around times now because we're using the old way of investing. Now, gaining competitive edge or the dashboards that I'll show you and the interactive graphs where we'll show you how is your business going or how is the investment going. Obviously, the KPI transparency and the exposure analysis where you know how is your direct and indirect investments working. The portfolio management and the fund structure. The integrations, if you are flexible to integrate with any data provider where it helps you, let's say you are using any other data provider, ERP system, CRM system. So imagine if you have the flexibility to integrate with another data provider along with your existing fintech technology or fintech solution to help you reduce the risks, to help you manage your investments more along. Again, the deal pipeline and due diligence. I'm sorry. So the deal pipeline and due diligence, I'm sure this is it's not even a step, it's a process when you want to do the due diligence. If you're a company, let's say if you're a family office where you're thinking to invest in some good opportunity, you need to go through the due diligence, and it's a big step where you have to manage the documents, do a research, do so many things. So imagine now if you have a fintech technology that it's going to help you to minimize that time, minimize the work that you're doing, and it's also integrated with your fintech technology to help you with the due diligence and the investments. And again, you can save it and keep it in the system where you can come back to that later, because we sure know not every step of the due diligence it will lead to the successful investment. One more thing is the mobile application. How easy it will be if you are a CEO, or if you are a CEO in a family office, let's say, and you have that on your mobile app. Isn't that so easy to just, while you're having your coffee, just check your mobile app where you can check how is your investments going, how is the KPI, the investment summary, and all of that. So nowadays, fintech is helping us so much to how to put that in words. We're in 2022, everything is easy. So why it's not easy for them, these big investors? So again, we are at Investra here helping every investor and every COO, every family office, and every private equity to help them with managing their investments. Let me talk a little bit about Investra. So in Investra, we are based in Abu Dhabi and Dubai, and our clients across the GCC, of course. We have two products within Investra, Investra Pro and Investra Plus. Investra Pro is a B2B product, and Investra Plus is a B2C product where it can be hosted whether on cloud or on premise. We are partnered with well-known data providers, as you may see, Bloomberg, Tableau, Oracle, Crunchbase, and many more. In Investra, we can help a group of people. These people that we can help with an Investra, whether if you are venture capitalists, startups, investment banks, PE, family offices, am I missing anything? Portfolio managers, high net worth individuals. We can help you all of the investors, whether, again, as I mentioned, these categories. So, so moving forward. Now, as I mentioned, that we have two products, Investra Pro and Investra Plus. Investra Pro, as we mentioned earlier, it's a B2B product, and it's a multifunctional platform that handles the multi-asset classes, ranging from private to public asset classes. I think we need to play a video. This is Investra Plus. If you can go back, please. Go back to Investra Pro. Yes, here, thank you.
Imagine a holistic investment management solution that's built with you in mind, saving you time and empowering you to seize every investment opportunity. Welcome to Investera, the next generation investment management platform designed for portfolio managers, family offices, private equity firms, venture capitalists, investment banks, and high net worth individuals. With Investera, you can effortlessly manage every aspect of the investment management process on a single platform and across different asset classes. Investera's extensive features cover the end-to-end fund management workflow, capital call, capital deployment, and fund structure. We allow you to build and easily manage your investment structures through a simple-to-use interface. Our sophisticated algorithms identify the exposure of your investments, enabling you to maximize profits and reduce risks. Investera presents you with up-to-date and accurate information, meeting both the generic and specific needs of investment management. Encrypted virtual data rooms, project management tools, and our alerts and notifications module help you streamline the due diligence process in a safe and secure environment. Automate the entire investment creation and management process by designing your own personalized workflows. Beautifully designed custom interactive dashboards simplify your complex data into easy-to-read graphics and charts, which reduce complexity and errors. Investera's integrated email solution allows you to quickly and securely share data, reports, and documents on the spot from any device. Our standalone investor portal application seamlessly integrates with Investera, enabling real-time performance updates of your portfolios. Whether you want to install Investera on-premise or use a cloud solution, our experienced developers will be on hand to help you every step of the way. No matter how specific or complex your requirements are, our financial experts will ensure that we find the perfect solution for your needs. And our bespoke approach allows you to customize the software specifically for you. At Investera, we just raised the bar for investment management solutions. What are you waiting for? Choose Investera today. Investera. Save time. Seize opportunity.
Now, the other product, which is the B2C product, it's Investra Plus. It's a B2C product where it's a market research platform, helps startup companies, venture capitalists, and many more. It helps you to gain the data coverage of some of the investors or the investing company, as well as it can provide you with the ecosystem info, and it gives you the coverage on public and private companies, and it can help you with networking with more than 3,000 investors or startups or investing companies. Moving forward. Here are some of the Investra Plus product features. As we can see, the market reports, the public securities, the graph knowledge, and it's kind of like a platform where you can post your investments. Let's say you can search for a specific investor, for example. You can follow, you can comment, you can see the whole history of that investor or investment. As we mentioned earlier, here's a quick, the advanced search, the industry reports, the market insights, the public securities. This is one of the most important things are within Investra Plus, where it helps all of these startups to get a better access to an investor, for example. Moving forward, please. We spoke about this. Moving forward. And yes, ladies and gentlemen, that was how Investor can help us as investors, as an investment banks, and about how the fintech technology are helping us nowadays with our investments, with the startups, with venture capitalists, and many more. Thank you so much for attending this session, and have a lovely day at GITEX. It's the first day, so enjoy it to the max.
Thank you very much, Roa, for sharing with us on Investera. Thank you. All right. Okay. I don't know which one to talk to. Next, we have, yes? Okay. Our next speaker will discuss how the fintech super apps are changing the way we function and how embedded finance is unlocking new verticals for B2Bs. I would like to welcome Mr. Costa Du, co-founder and CEO of Dapio. Welcome, Costa.
Thank you.
Good afternoon, Dubai. My name is Costa Du. I'm a CEO and co-founder of Dapio. We do payments, but I'm here not just to tell you about payments. I'm here to share with you my passion of something even bigger, because today we are literally in between of cryptocurrencies there and traditional MasterCard there. And when everybody is talking these days about crypto, booming crypto, coins, tokens, blockchain, etc., if we would like to talk about payments within crypto, we will be talking about from about 15 billion US in terms of transactions and payments, especially payments through crypto. But if we will be talking about more traditional payments and talk about two companies, Alipay and WeChat, we will be talking about 62 trillion turnover through payments per annum by just these two fintech giants. That's why today's crypto transactions are 12,500 times smaller compared to more traditional payment schemes. Next. Today, I want to talk to you about the embedded finance and how exactly the Elon Musk gentleman will be building the everything app, probably from Twitter. That's the biggest question mark. In this regards, I want to show you a few apps you probably can be familiar with. You probably heard of WeChat, a super app with 1 million of mobile apps, mini apps inside. You probably heard about Alipay, Grab, etc., and you are definitely familiar with KARM because we are here. These are super apps. Today's concept, when we are talking about, for example, Alipay, if you never tried it, you definitely can try it and to see how it works. But the thing is, today, you don't need to develop everything from scratch. You don't need to invest in your, full banking license. You don't need to invest in card issuing. It's because you can consume it from the existing player. That's what these guys did. They developed a super app concept as well as Grab, for example. And they did it beautifully. They didn't develop everything. They just utilized embedded finance capabilities. That's the way. Could you please go to the blue slide for me? Blue. Next. With the industries. Next. Yeah, this one, previous one. Today, we definitely see the rise of super app concepts across telecoms. It's because today, telecom became just a provider of commodity. What's the difference between Etisalat, Duo, Vodafone, Virgin, etc.? You just consume data. That's what they do. They provide commodity. At the same time, they need to add value to the market. That's why they started to introduce embedded finance concept. Then you can think about the same of transportation and delivery. When Gojek, Grab, from just a delivery app, they became a super app with payment capabilities at the same time. Next. Today, we see that these companies like North, Spelled on Shopify, QuickBooks, they are started to provide a variety of services to the existing customer base. That's what I definitely believe in, because why it's so important for me, we are building this exact product by ourselves across UK, United States, Europe, and in the future here, because we want to make non-financial companies to introduce financial services. That's what exactly we do. And at Dapio, my mission is to converge all kind of worlds into a single payment facility. We want to introduce in-store payments. We want to introduce e-com payments. At the same time, we are working hard on introducing metaverse payment acceptance by traditional cards. That's what the world of the future is about. And the biggest question mark, when Elon Musk will finally acquire Twitter, how he will build the everything app. I don't believe he will decide to build everything from the scratch, because you don't need to. You can utilize a variety of today's available suppliers of the embedded finance. I and my team, we are based over there. Happy to continue the conversation about the embedded finance and embedded payments. Thank you. Have a good day.
All right, ladies and gentlemen, we will pause for a short break and we will reconvene at 1 o'clock, where we will have Dr. Chen from NYU talk to us about the opportunities and challenges in adopting Web3 for fintech industries. I will see you soon.